All right, hey, everyone. Let's just set this up here. Mark here, Mark P Markets. Hey, thanks for joining me. Sorry, I'm running a little bit behind, but we'll get this thing going right away. Okay, so in this session, if you're new, again, I want to welcome you. If you want like to share what city or what country you are watching from, that's always a fun fact. In this session, I'm not going to be going over other people's charts and things like I do on Monday. In this session, I'm going to be going over day trade setups for Bitcoin. Okay, now if you're a beginner, this isn't the best place to start, but people seem to have an interest in this, so I'll show you. It's an exercise, okay, to find high probability setups so that you can have a better chance of coming out with a positive outcome as a day trade. All right. And if we get an actual example here, I will look to take the trade on paper to demonstrate, the thought process that goes on behind the scenes, or that should go on in your mind as you're watching the trade unfold. Okay. So again, I want to welcome everyone. Let's get this thing started, shall we? So here, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, and let's say hello. We got Zelta. Hey, how are you? We got Shi. We got Raman. All right, Elijah. It's good to see you all. All right, let's make my chart a little more easier on the eye there. Okay, so we're gonna get started here, and also let me move this. Let me just refresh this chart so that we can have a point of reference. As you can see, I have two charts here, okay? I have Bitcoin on the daily and Bitcoin on the 30-minute. Now we're gonna switch these to perpetual futures charts, but right now, this is what we're looking at. I wanna mention that when you're looking for day trades, you have to basically let go of the bigger picture, meaning the daily chart, because as a day trader, we're only interested in momentum. Momentum changes throughout the day and it could change frequently. So we don't want to get caught up with our bigger picture opinions. It's very important to separate the two, okay? So as a day trader, we're only thinking intraday, which means we should be open to both long and short, all right? So we always have to consider the market from both sides. All right, so bigger picture, we're going to put this away, but I just want to mention something about this bigger picture. Again, I don't know how many of you follow fake gurus or frauds, because there's so many of them. And when we were pushing these levels the other day, right? I mean, the whole world was basically convinced we were going to 40K or whatever. Markets don't move in straight lines. And one thing I mentioned, I just have to say this real quick. One thing I mentioned in my stream on Monday was if you can count 5 waves in a structure, and I teach this in my training program. If you can count 5 waves in a structure, which can be counted here, 1, 2, this is 3, 4, 5, okay? 5 waves inside of this impulse structure. If you can clearly count 5 waves, chances are the move is over and a pullback is likely. So if you were foolish and bought at 23K, you get what you pay for, all right? Because there was absolutely no reason to be buying there. Now you say, well, how about shorting it? Well, shorting it is tough. This is a tough call because a pullback is likely. And as you can see, I'm looking for the pullback to get back into this area for a potential long. That's the bigger picture. So trying to trade that pullback is aggressive because you are fighting the momentum. But there is a higher likelihood that we get the pullback, and we can see the beginnings of that now. All right, that's the bigger picture. Now, let's not let that confuse us for the smaller picture, okay? So let's open up this smaller picture. Wrong chart. Let's look at the smaller picture here, because I just finished talking about the bigger picture, right? And so the bigger picture basically right now leans more toward the bearish side in terms of a pullback. But intraday, we may not get that pullback may not unfold now. It may not unfold for the next few days. In fact, it seems like the market is waiting for, I think it's what, GDP comes out tomorrow, I think it is. There's a report coming out, and perhaps the market is waiting for that. Plus, we have all kinds of quarterly reports coming out this week. So that can affect things. Okay. So what do I think of Coin Bureau? That's a good question. I'm familiar with them. I think the guy is very, he's humorous to watch because he does this a lot with his hands. That's funny. But I mean, it's interesting. Coin Bureau is more of a news. They're more of a news site. He's not really pushing technical analysis. So I mean, it's entertaining and I find it interesting. So I don't really have anything bad to say about Coin Bureau. It's an interesting source for some news. I mean, he has touched on some regulatory things, which I found interesting. But I don't watch him every day. But certainly, interesting. But it's not like you can't really take that and make trades out of it. All right. So, and I don't think that's his purpose. But it is an interesting source. They do interesting research. So if you want to look at it as that, and you look and just see what's going on in the Bitcoin world, okay, I'm not going to give that guy a hard time. The guys, when I talk about frauds, I'm talking about these technical analysis people that push these dreams on you. Okay, Coin Bureau is not pushing any dreams on you. He's just sharing news. So that's the thing. Now, all right, so before I get into those rants, let's talk a little bit about this situation here, because we want to get our goal as a day trader is to get a sense of perspective, or a sense of what to expect on an intraday level, something that's reasonable. All right. So right off the bat, the way Bitcoin has been trading, I know it's unreasonable to expect 500 points in a day, although it's possible. As a day trader, I need to be a little more realistic. So I know just in general, looking to make 100 to 150 points is within reason intraday, and looking to risk about 60 to 80, maybe 100 points is within reason intraday. One of the benefits to intraday is you're not exposing yourself to the larger magnitude of risk on the bigger picture, right? On a daily time frame, you're looking at like 1,000 points of risk. In fact, the recent swing trade that I called that got stopped out, that was a 950 point stop out or loss. That's about right. It's actually kind of small on the bigger picture, but you should not be losing 950 points on an intraday trade. Okay, so that's the separation there. You have to make sure you keep that separated. People make that mistake all the time. All right, so with that being said, let's talk about our bigger picture, or let me use these words right. Let's talk about our intraday broader trend situation. Okay, this is a range. If we go back, so I'm looking at a 30-minute chart. All right, and the 30-minute chart allows me to go back a few days. So I'm going back to the 21st here, right? Just a few days back. And that section, that's really all I need. I don't need to go further back than that. Okay, I really don't. I mean, I could do this, but I really don't. Well, let's do that. Let's just go back a little further, and let's include this movement in here, right? The squeeze that we had from a few days ago. This entire consolidation at this point intraday can be considered a higher low formation developing here. Okay, so that's how we have to treat this. So instead of sitting here and being, oh, it's a short, look, it's a short, because that's what Captain Obvious is going to tell you. It's a short, but look what you're shorting into. This is a support area. Okay, so not exactly a place that I should be excited about shorting, even though, we talked about that a broader pullback is likely to occur. It doesn't mean it's going to occur now. We need a catalyst to get that thing going. All right, so that catalyst may be GDP. That catalyst may be something else. I don't know. But you can't expect that catalyst to assert itself right now. But usually it comes from a news event. Now, so with that being said, I'm going to determine for intraday that we're in a range-bound market, and that's my range low, and this is my range high, basically. Okay, these areas. So that's this is my context. We also know that the midpoint of the range is right there. Look how many times this thing touched that midpoint and bounced off, or showed us that midpoint has some sort of relevance quite a few times. I mean, going all the way back to here. Look at that. Okay, so midpoints are typically highly random, and you have to be very careful what you do around midpoints. So here's the thing: the outer levels, the extremes, offer some sort of probability, right? Some sort of expectation that we can reasonably formulate and say, hey, look, it's coming off the low. it should bounce off the low. That's what we should expect. And look what the 30-minute candle is doing right now. It's giving us the pin bar. This thing has been open now. This candle has been open for 5 minutes. Okay. This thing has 25 minutes before it closes. If it closes like that, okay, that pin bar, we get that, then a move up to the midpoint intraday is very reasonable. How much money would that be, or what kind of move would that look like? So let's say right now this thing, the high of this candle is 22,485. The midpoint is around what, 22,741. So that's a good 300 points. Now, am I going to make 300 points, or is that what I should target? No, you should be targeting like maybe half that, 150. That's very reasonable. Pulling 150 points is very reasonable in this area. Okay, especially if we're risking. How big is this candle? 496 to 348. It's about 150 points, something like that. So at this point, that's 1-to-1. But we want to refine this further. Okay, so we want to switch this to a 5-minute chart. So basically, off of my 30-minute chart, I got some perspective. Are you guys following me so far? Do you guys have any questions about this? Okay, thoughts on glitches in the market yesterday for many big names. Well, are you talking about the quarterly reports? I haven't seen all of them. So, with something like that, if there's a lot of unusual stuff going on there, I mean, the thing you want to take a look at really is the NASDAQ or the S&P. So I'm not really going to spend time answering that kind of stuff. But let's just take a quick look at the NASDAQ. The NASDAQ's relevant to Bitcoin because whatever the NASDAQ does, I mean, look at that. Okay. Notice, right? Bitcoin is kind of having some sort of pullback going on. And look at this thing. In fact, Avi from Israel the other day asked me, he was short this thing. He was asking me what to do. Hopefully he's still in it, but I told him it might be a good idea to get out if this thing continues. This thing got stuck in this resistance. Look at that. And it just so happens that the quarterly reports don't come out so good. And now you get this nasty candle. I warn people not to be buying into resistance levels. Okay. But if you're blind or you're naive or you like to buy into dreams, then, those are the people that bought up here like morons, right? Just a bad place to buy. We could have known that before the fact. And I was saying that on Monday. Anyway, let me not get into that rant. So let's go back to Bitcoin over here. So as far as our intraday plan here, so we're looking for longs, okay, around this location. Can I open this up? There we go. So we're looking for longs around this location here, okay, and in this area. Now we're sort of bouncing at this moment, and I don't want to chase this thing. So another thing you need to learn about being a day trader is you have to have a very strong control over your own behavior. This is a behavioral game. If you can't control yourself, you have no chance of winning. Okay, people can't control themselves. I'm missing out. I better buy it before I miss. If that's you, you need to spend time on fixing that, because you have to understand there are always more opportunities. You're never missing out on anything, never. So that's the mindset you have to have. Okay, moving 10 to 20%. The result was right. Well, again, if there's a lot of unexpected results, like I talk about, charts don't account for the unexpected future, right? Charts don't account for news reports that people weren't expecting. That's why these morons who come out and say, well, yeah, I can forecast the future, and in 6 months Bitcoin will be at 500,000 because my RSI says so. They're fooling themselves. They're fooling you. There's no way to know, because you may have some kind of report that no one was expecting change everything. So charts can't help us in that type of long-term forecasting. They cannot. And that's why I get so passionate about that, because I cannot believe people still believe in these dreams and pay for them. Okay. It was not due to unexpected quarterly. It was a technical glitch. I'm not familiar with the technical glitch. But whatever that thing was, again, because I was just looking at the reports. If it's a glitch, then glitches are usually like a temporary thing. I don't know what that, those glitches, you have to be very suspect of what that is. If it's a glitch, then nothing should have changed in terms of value. So if the market pulls back temporarily as a result, it should bounce back like right away. Just like if someone comes out with fake news and people realize it's fake news, but bounces back. The glitch should not stick. all right, if it's a glitch, because it means that nothing has changed, okay? With the NYC order book at market open yesterday, the book was for to us unknown reasons not properly filled. Okay. I mean, so that's all news to me. Drama, they need to update their systems or something. I don't know, but I don't know what to make of that. But anyway, all right, let's talk about this Bitcoin situation again. When something like that, it should bounce back. If people got caught and people lost money as a result of that, the market really should just get processed. We don't see, there's no fundamental change in the market. Okay, so just again, it goes back to, if there was some sort of temporary movement and it went to a level that was attractive, then there's something to do. It's really that simple. So let's go back to Bitcoin here. This is the 5-minute, right? Now I'm going to change this to my perp chart, because you should, if you're trading futures or whatever, you're trying to day trade Bitcoin, you should be looking at a perpetual futures chart. So you use whichever exchange you're using. Now we just talked about, that level on the 30-minute, which is basically around this area, okay, maybe slightly lower. Now on what we switched to the 5-minute for, we switched to this for the setup. The setup, someone asked me the other day, what's a setup? So the setup is basically a set of criteria that allows us to enter the market. Not only it justifies our entry, not only that, it gives us a point of reference for a stop loss, so we can quantify our risk, right? So the setup is basically an isolated situation that should align with a higher probability opportunity. Now, of course, we first looked at our 30-minute so we could get a sense of where we want to see the setup, because setups appear randomly, okay? I have pushed that all the time, randomly. So you can get setups, you can get a bullish pin bar in the middle of nowhere, okay, or whatever, and it goes nowhere because it's the location. So we have a location in mind here, all right? And that location is this area right here, right? That's the location, and I'm interested in longs. Now, this momentum on the 5-minute chart is bearish momentum. It's lower highs and lower lows. So what would be nice to see, right, instead of taking a lone buy signal, because look, there was one over here, which went nowhere, right? Went right back to this low. Then we had this pin bar over here, which tried to go somewhere, but as you can see, this trend structure, this 5-minute trend structure is still intact. Lower highs, right? Lower low likely. So what do I want to see then? What do I want to see in this area here, right? The ideal thing to see would be a double bottom, because that would tell me that this structure is now beginning to change and aligning with the bigger picture. The bigger picture, as we determined, is a range-bound market within a broader bullish structure. So the long side should be favored, especially if I see a double bottom develop in such a location. So you guys following me so far? We put the puzzle pieces together. Now we have to let the market align and tell us when we should take a risk. So let me open up this thing here. Okay, so if we see the setup, I'll take the trade on paper, right? So we can see what that looks like and how to manage the trade. So at this point, I'm waiting. Now, while I'm waiting, I just want to mention a couple of things. So I talked about looking for this setup, and I talked about the bigger picture. These are elements of context, okay? Now, I teach context as part of my training program. In fact, that's what my training program is about, 6 steps to basically get to this context. As a day trader, I'm only really using 3 of those steps. The 6 steps are really for the bigger picture, like swing trades, okay? And out of those 6 steps, 2 of them, right? Because basically, 2 of them, or maybe even 3 of them at times, but they're really more for confirmation and they're not absolutely necessary. So you have to understand something in this game. Less is more. And you should be able to make actionable decisions, especially as a day trader, with the least amount of information possible. Okay, so if you're interested in learning more about that, you can check out my training program in the link in the description below. I am going to run a special. All right, now the typical price is like $300, but I'm going to run a special, and here's how I'm running it. I'll mention it very briefly here because I'm not here to do an ad, but very briefly, here's what I'm going to do. I have a Discord server, right? It's a free place you can go, but there's a premium channel in there. Okay. And in that premium channel, I have a premium membership that's called Active Learner. Active Learner basically includes my Signal service, and it includes my training program. Basically, you're getting, as an active learner, you're getting my training program for 66% off. Okay. You're basically, if you pay for that package, you pay for the yearly version of it. Okay. You're getting the training program for $99. Now, it's a yearly package. Let me just mention this. It's a yearly package. You're paying one price for the entire year. I'm going to give a 30% coupon on that, okay, for today. So if you're interested, I'm going to mention this in the server. I'm going to go in the server in a few hours, and I'm going to mention it because I'm experimenting with something in there, with the streaming thing in there. So I'm not going to come back on YouTube. I'm just going to go in there, and I'm going to explain it in more detail. If you're interested in that, join the server, right? Send me a private message, and I will send you the coupon. All right, but just keep in mind, if I give you the coupon, you need to use it like today or tomorrow, because after that it won't be any good. So if you don't have the money or you're unsure, then don't ask me for the coupon, okay? Because I'm going to delete the coupon, and people take advantage of me and they ask me for the coupon, and then I don't hear from them for 3 weeks, and then I got to keep this coupon open, and it's really not fair to me. So if you're interested in that, send me a private message in the server. I will let you know. Speaking of the server, how much time do we have here? This candle just opened, okay? I'm looking for the setup, but I'm not going to wait. I'm not going to take it while the candle is open. But we may have something developing here. This candle needs to close. All right, so one thing I have to mention is I've set up this new thing. Not all of you may be able to see it, but it's a free thing. So this is not an ad. It's a free thing. I have a section in my server called Auto Setups, okay? And basically what I've done is I've found a way to take my personal screening criteria, and I've been able to push the results into the server. I've tested this. It works. The technical part of it works. I just now have to connect everything. It's going to take me a little while, but the thing is, this is free. It's going to generate a result once per week. It's trade of the week, but it's automated. That's what it is. But the thing is, I call it a setup, because a trade idea is a buy stop, a stop loss, and a target. This thing is not going to generate all that. It's going to generate a setup, a starting point. Okay, so each week, and I'm watching this thing at the same time. 24 was that 22,499. We got. I'm going to wait for this candle to close. Each week, it's going to generate a result for a rotating asset class. Meaning, like week 1, it's going to generate a forex result. Week 2, it's going to generate a stock result. So if you're only interested in stocks, for example, you'll have to wait like 2 weeks every time to get a new result. Anyway, that's going to be available free. All right, it's going to be auto setup of the week, and I'm going to have a channel in there to explain how to use that. So if you're not a member of the channel, if you're not a member of the server, you should join, because all of that is coming. And I'm going to have a premium area for those. All right, which is something separate. I'm not going to talk about that yet because it's going to be a while before I set that up. But I'm going to set up one of those screener channels for my active investor group for optionable stocks. Okay, so I just have to mention that. Okay, anyway, I recommend using a desktop app. It is more convenient to do it there. A desktop app? Are you talking about something like? Oh, okay. Oh, Simon's asking me here. Do you trade or always from? No, this is just for paper trade. This is just a paper trade exercise. I don't use this to trade. Okay, this is just a nice demonstration tool. But I mean, yeah, you can use like something like MetaTrader. I've been meaning to, put up a MetaTrader thing on here. But this is just for educational purposes here. I don't actually use this. Okay, so look, we have this. What time is it? All right, I'm going to take this. We're going to take 2 lots, right? And we're going to just get in. Now, I used a market order to get in here. And that's at 22.5, basically at 510, yeah, something like that. Okay, so I took that long. I was a little bit behind on that because, I mean, it broke above this high, 22,499. So I'm 10 points higher. Okay, so I got 10 points worse. It's not horrible. Okay, but the way I just placed that order, I used a market order. For swing trades especially, I don't place the order that way. I use stop orders to get in, but I don't have the time here to set up a stop order, right? It takes a few minutes. the market's moving. I'm not going to have time to do that as a day trader most of the time. Okay, so the candle closed. Now here's the thing. Here's what I do have time to do. All right, so I place that order, right? I'm in the market. Now I go to this, as you can see, right? I have this long 2 lots, right? You can see the order here. Now I can adjust this order. Of course, this is gonna, this is the way you adjust orders is not gonna be the same as this. I'm just showing you for educational purposes, but I can now place my stop, okay? And I'm gonna set the stop by price. So where should I place my stop in a situation like this? Well, you have to look at my entry candle, okay? But in a situation here, right, not just the entry candle, I need to look at a couple of candles because we had the pin bar over here, right? And really, if I'm going to set a stop on something like this, I don't want to set it too tight because it'll get stopped out very easily. So we're going to have to set it somewhere below this pin bar low. What is that? 22,372. Man, that's low. Let's see. Can I set it around? All right, so I can set it around 400. All right, and so that's 110 points of risk, basically. That's a little on the high side, but all right, that's what it is. So let's put that, okay? So I'm going to put it at 22,395. It's not going to really, 395 is not going to really matter too much. I don't like to put the whole number, but anyway, so I put the stop there. For paper trading, for live trades, I use the platform. So I'm using Coinbase Pro if I'm involved in this. I use something called CQG, that's for futures. I use a few things. Then there's something for Forex. I use MetaTrader for order entry. That's it, order entry, nothing else, because MetaTrader is a ridiculously antiquated platform, and I got a big problem with, I can't believe people still use that platform. It hasn't changed in like 15 years. Okay, but for order entry, you have no choice. Okay, so now I placed my stop loss order. Now notice, so I got into the trade. First thing I put was my stop loss. Right? And that's what you should do. You should get in the habit of that. In fact, you should have all this stuff actually figured out in advance. Okay, now for my take profit, I want to set something relative to my stop. Now notice, the fake guru will say to you, well, here's how you figure out your profit target. You see, you draw like this line over here and you put the profit target up there. Okay, well, here's the thing. Profit targets should be set as a function of risk. Okay, so I've risked 110 points in this trade. That means my first profit target needs to be at least 110 points, at least, to justify my trade. Now, as a day trader, one-to-one reward risk is usually not the best idea, okay? You usually want to do 1.5 to 1. But for this example, we'll do 1-to-1. So if I risked 110 points, then I should look at my entry price, right? And then add 110 points to that. So what is that? That's going to be 620, okay? So let's put 620 on the chart here. So 620 is right there, okay? So if I can get, if Bitcoin can rally its way back up there, I'm at 1-to-1 reward risk, all right? Which again, that's the minimum. That's the minimum I should be going for. If Bitcoin wants to rally further, I need to try to give it a chance. That's why I put on 2 contracts, so I can try to ride one. So here's the thing. We don't have to automatically set up an order here. We can say, well, if it gets there, that's when I should really start paying attention. So what to do then? Well, set the order a little higher, right? Basically like 1.5 to 1. So don't set it at 1-to-1, which would be, 620. Put it at like 645. So 22,645. Okay. Now again, this is for reference. That's all it is, right? So I just put my order in for 645. Okay. Now, so now obviously the market's not going there. It's not in a hurry to get there, as we can see. So 645 is over here. Let's put it on the chart. 645 is right here. Okay. Again, that's just for reference. Now, is it going to get there? I have no idea. In fact, it's not looking so good right now. We'll see how this thing goes. This thing may actually tap into the support, stop me out in reverse. Okay, that can happen. That's what happens when you get into things and you sort of chase them. That happens. So you have to be prepared for that. All right. The ideal place to get into a position really would be here. But a lot of times when I do these streams and I say, okay, we're going to wait for the ideal position, that's me making fun of myself. We're going to wait for the ideal position, and it never gets there. Okay. So there's a trade-off. You have to decide, right? Do we take the reversal candle, or do we wait for the ideal position? A lot of times it's not going to go to the ideal position. So we're taking a chance. One way you can adjust for this is instead of taking 2 contracts, you take 1. All right, because it's not the best price. Anyway, so I'm just running through the mentality here very quickly. Some of it may be advanced for some people. So really just try to stick with me here. And if you have any questions, let me know. I love TradingView, but Binance integration sucks. Okay, that's, those integrations may not be good. If you're using Binance, then use your Binance platform to place the trades. Obviously, don't use TradingView. Again, I'm just using this to demonstrate an example. The order entry should be similar, right? No matter what time frame. I just know some platforms don't allow you to do the buy stops and all that kind of stuff. That may be confusing. So, I would like to demonstrate on another platform, and I'll see what I can do. But you want to know something? Like some of these platforms, they're overly complicated and unnecessary, right? And you really want to keep that as simple as possible, the order entry. So anyway, everything that I just showed here, you should be able to do on any platform. All right, whether it's MetaTrader, whether it's Binance, whether it's whatever. Okay, no problem. Okay. So look, we turned around again. Great. Let's see how this thing behaves. So let's talk about the profit targets. All right. And oh, by the way, if you guys can do me a favor, press the like button and subscribe if you're interested in the channel. I am going to be making more of an effort on YouTube, and I'm going to look to put out other types of videos, not just these. So I am looking to build more of a YouTube presence. So now I need the algorithm to be a little nicer to me. So if you can press the like button, that would help me out a lot, and subscribe or whatever, because when I come out with some of that material, obviously you'll be the first to know. So again, thank you in advance for that. Okay, so anyway, as we watch this thing turn around, let's see where it goes. Let's talk about profit targets again. So I set up this, I put the profit target here, right, at 645 as just a reference point. Now, what's that about? If the market makes it up here, okay, and if it makes it up there effortlessly, I don't mind selling 1. In fact, I set up my order wrong. Let's go back to that real quick, because I set up 2 contracts to be sold. See that? Set up 2. I don't want to sell 2. I only want to sell 1. Okay, so I should be able to adjust that on here. Let me see here. Can I do that on here? I may have to cancel this whole thing out. Yeah, I'm gonna have to cancel this out. I don't want to close the position. I'm gonna have to cancel these orders. Okay, and I'll just leave the stop loss on this here. All right, I want to remove the take profit, and the reason for that is I want a separate take profit. This is where you have to do what's called an OCO order. Okay, I should be able to sell just 1, but you see, it doesn't let me choose, right? It says sell 2, and I can't change that. So, both of them would go at the same price. I want to sell 1. So basically the way to do that is you buy 1 at a time. That's how you have to do that. Now you have to do that on MetaTrader as well. You buy 1 contract at a time. Actually, I think you can sell portions on MetaTrader, but you have to do it. I don't think you can preset the orders. Anyway, let's not get confusing here. I would have to buy each contract alone, right? Buy 1 and then buy 1. So I'd have 2 orders of 1. Does that make sense? In this case, I have 2. So I can unload 1 right now, right? Manually, I can unload 1, but I want to set a profit target for 1. So here's what I'll do for this example. I will set a profit target, but instead of setting that profit target for 2, right, at a 1-to-1 level, we'll put 22. Let's do 2-to-1, right? Let's just put this really extreme. So that would be 220 points, right? 2-to-1, because I'm risking 110. So how much would that be? 220 plus this number would be like 730, I think it is, right? 730. Let's just put that for now. That would be basically 2 to 1. Okay. Now I have 2 contracts for sale there, right? Based on what this thing says. So here's the idea. Let's put the line here. Let's put this now at 730. Okay. Up in here. So up in here is basically 2 to 1. Now, do I believe it's going to go there? It's within reason, but this is, again, a reference point. Understand where I'm going with this. I'm not expecting that. I'm not sitting here saying, well, I'm not getting out until it goes up there. I'm not doing that. What I'm doing here is I've determined my 1 to 1 and I've determined my 2 to 1. Those are profit targets. Now, if the market goes 1 to 1 and gives me a hard time, I can manually exit 1. Okay, and then I will have 1 left with a profit target of 2 to 1. Does that make sense? So I'm going to use the manual exit if the market gives me a hard time. If the market does not give me a hard time and just blows through, okay, and just does one of these, then there's nothing to do. You just sit back and let the market work. See, kind of like this. There's nothing to do. Let the market work. We're almost at 1 to 1. So when we get there, then we can start thinking, all right, and letting the market determine. Now, you may say, hey, you know what? Screw it. I want to take the money. Then you always have that option. There's nothing wrong with taking money off the table. Maybe Bitcoin blows through 1 to 1, and maybe it goes into this area right here and gives you a hard time. Okay, take something off the table. You have 2 contracts. Okay, the whole idea of 2 contracts is to be able to lock in a profit, a partial profit, which gives you then a lot of flexibility. Now, at that point, when our profit is locked in, partial profit, it's within reason to move our stop to break even at that point. Okay, I mean, we could move it now, but it's a little early. If we move the stop to break even, I would be moving the stop to here, all right? And that can easily get tapped out on just a little noise. So it would be nice if I had some profit, right, locked in, and then break even. If at that point I have a risk-free trade. You realize that. Now, some people may argue and say that's not risk-free because you're giving back. Well, I'm giving back profit. That's not money that I've risked. That's market money. That's house money, right? So that's a risk-free trade at that point. I'm not there yet. Okay, this thing is I'm still dealing with some risk here. But as soon as I could move my stop to break even, that's the ideal situation to be in, because now it's risk-free. If the market stops you out, hey, and you locked in something, it's still a green trade, right? That's trade management. And that's basically how you grow accounts over time. The real key to growing an account over time is how you manage the loss. Really, that's really the key. Like, everyone focuses on profit and you're going to make $1 billion and you're going to be a billionaire by tomorrow if you follow my magical technique, right? You're going to hear that everywhere. But the real key, and they don't want to tell you this, perhaps most of them don't know, is it's how you manage the loss. You want to keep that loss as small as possible. If this thing gives us a hard time, I mean, right now I have the choice to mitigate the risk. I can get out of this right now and I'd be up what is that? $100 because I have 2 contracts on. I mean, yeah, that's nice, but that doesn't justify my risk. That's why I have to try to give it a chance. You know, if I'm really itching to get out, I need to at least try to give it a chance. It's not giving me a hard time yet, so I need to give it a chance. Does that make sense? So we'll see how that plays out. So you guys following me so far? You can cancel, but partial. Right. So each platform may be going to have some, if not every platform is going to have the same exact functionality. But like in this case, again, I can partial it manually, like I explained earlier. But if you want to handle each contract on its own, you have to buy each contract individually, right? You buy one, and now you can set up their own orders. Now, keep something in mind. When you set up orders like that, you have to have the one cancels other. This thing doesn't give me that option, right? One cancels other. A lot of platforms do. If you don't have that, you're going to have to do it manually, meaning when your profit target is reached, you have to make sure to remember to cancel that stop order. Otherwise, it stays in there. And if the market goes there, you're now going to get stuck on, you're going to get short when you don't mean to get short. And that can make a mess of things, especially if you forget. So one cancels the other solves that problem, but not every platform offers that functionality, especially like these retail trader platforms. A lot of them, they don't have that. Usually more advanced platforms have that type of functionality. Something like MetaTrader takes care of it automatically, right? So that's why you don't even see it on there, right? When the profit target's reached, your stop, or the whole order, it just gets cleared. Okay, so all right. Anyway, so now look at this 5-minute pin bar. What time is it? Okay, 5-minute pin bar, bearish. Okay, not exactly what I want to see, but the thing is, it's on a 5-minute. And this level here, this area for that pin bar, it's not exactly the most relevant level. It's some kind of level because look, there was a previous support, so there's a little action there. But the thing is, we determined earlier, remember, this is why you get perspective. We're coming off the range low, and this is not exactly a broad trend, right? So we can't go nuts over a pin bar. See how it's getting eaten up? So people that overreact and get short in something like this, now they're stuck. Oh, it's short. It's not a short, okay? Not in this location. It's very random here. Notice we're going to the mid part of the range, like I talked about earlier, right? The midpoint. Now that midpoint, there's some relevance to it, okay? Because there's been a lot of reactions in this area. So we'll see if we get some sort of conflicting signal, but it's just not there yet. I'm not going to overreact. If I can get out of one here, that would be a great spot. So again, we're just going to let this thing try to work its way a bit here. Let's take a look. Nothing wrong with checking the NASDAQ because we may get some hints from the NASDAQ. Let's see, NSX, and I'm going to change this chart here. Let's change this chart to a 5-minute. And let's see what's going on. Is the NASDAQ helping us out? No, it's not. Okay. In fact, look, the NASDAQ on the 5, oh, that's horrible. That's a sell signal developing here. Okay. That's going to break. So that's good thank you for pointing that out, because that can at least give us a hint, like what should we do with this? That can help us gauge our expectations. Now this pin bar on the 5-minute Bitcoin is now in effect. And look, I'm still up some money. So what should I do? I'm going to get out. That's what I'm going to do. Can I get out fast enough? Let's see. Oh, no, this thing just went negative on me. Man, I couldn't even get out fast enough because I can't see. All right, so let's see if this is not good, okay? I have a chance right now to basically take a small loss, and the NASDAQ is not helping me. So what am I waiting for? I'll tell you what I'm waiting for. I'm waiting for a little noise. I may not get it, but I'm not overreacting. All right. This NASDAQ is certainly a sign here that this thing is probably not going anywhere favorable on the long side. So a mistake that I'm not going to make is I'm not going to just reverse and go short. That's a bad idea. Okay. Because again, we're just going into the range low. So keep in mind, just because the NASDAQ has turned red, like the NASDAQ is nasty like this, doesn't mean Bitcoin's going to follow it exactly. So you see what I mean? See how we're getting a little hesitation here? This is my chance, right? This is my chance to get out for either break even or maybe like a small green, but most likely break even. If this thing just pops up a bit, let's see if we get it. Now it's not doing it. Let's see if we get it. Where are we? 490. So we had some warning with that pin bar, but like I said, I was giving it a chance, and it just, the NASDAQ helped make the decision, right, for us there. Let's see if we can get that break even. Now, look, I mean, how much is this thing red? $40. I mean, that's not a huge loss, but I'm trying to see if I can get this thing at break even. You don't want to be overly sensitive with these things. 492, 490. I'm just watching the price. It's just hard for me to see those small numbers. Okay. And how much time do we have? We have 1 minute till this candle closes. Let me see here. Yeah. All right. So if it closes like this, I'm just going to have to blow it out. But let's see. We may get like a little bit of a tail there, right? It requires patience. It's not easy, especially if this is real money. It's not easy. All right. Sometimes it just goes in a straight line and you just have to bang it out. But sometimes like this, it hesitates a bit, and you can bang it out in a much better price than just banging it out at the bottom. All right. Now, did you guys see how that pin bar developed and just turned into this so quickly? Like 1 minute, I'm like, oh yeah, pin bar, don't worry about it, and then boom, just hammers us like that. You see that? So it happens. I was aware of the pin bar, but I was willing to give this thing a chance because of the location. And then Zelta here brought up the NASDAQ, or whoever, Raman brought up the NASDAQ. And the NASDAQ said, hey, I'm not helping you out. Okay, see this? Don't want to see that. I'm going to have to get out. Okay, all right, so what did I get out at? 395. Okay, so I'm looking at the turn screen. All right, what else is new? So let's take a look at the history here. So what was that? $42 loss. Okay, is that right? Yeah. Close long, so $42 loss. And now look at turns. See what I mean? Turns, see that? As soon as I bang it out, and the NASDAQ turned too, all I had to do was wait 30 more seconds, and I would have been back into the green here. All right, so look, this is a good learning experience, what to do in this situation. Like, that's going to happen to you. All right, so it's good that you see that happen to me on paper. So, you know, I was waiting, as you saw, I was waiting. I was trying to give this a chance for something like this to happen. And it waited until I got out. As soon as I got out, it turned. So is that a conspiracy theory? This is on paper. Right? I had no real position on. They weren't watching my orders. So you just have to be patient, okay, and give this thing a chance. So the question now is what to do next. What do you do here? Do you just jump right back in? Well, in theory, the right thing to do is to wait until this candle closes and then take the long. But this is the problem with buying into prices that are less than ideal. It's very random. It's going to happen. Now, what would if I was still in this, I would try to give this a chance, okay? Or even just get out here and just take whatever, right? And just get out of this thing because it just sucks. But that's why I like to wait for ideal prices, okay? So the ideal thing to do, right, is wait for the next signal. Don't just react and jump right back in, because this thing in the next 5 minutes can turn into a red candle again, especially since the NASDAQ is not exactly on our side. I mean, this is clearly a bearish trend intraday on the NASDAQ. So even though we're getting this blip over here, okay, it tried to break. It was a false breakout. It tried to break. This should be used as an opportunity to get out of the trade, okay? Take the loss, or this at least would have been a small gain, right? Because I was along from 511 or whatever. So I could, what was this thing right now? So I could have gotten out for like maybe a $20 profit, which again, it's just break even. It doesn't really count for anything, but break even. And that's that, right? You're out of this thing and you're not fighting the NASDAQ anymore. But just notice this relationship. I'm glad you brought that up, Raman, because I should have been paying attention to that a little bit more. Just notice, right? The false break, right? The fake out, green. Look at this, green. So it can at least help you, give you some extra perspective. Does that make sense? Hey, how are you, Constantino? It's good to see you. All right, does that make sense, you guys? So, you know, don't overreact to this again. This trend, even though we're getting this bullish candle on the NASDAQ, this trend is not changing yet. So don't overreact to this. Don't just rush back in. This would have been nice if I was still in it, but most likely I would have gotten out to break even. Okay. Of course, after the fact, we can say whatever we want, right? It doesn't matter. I got out at the bottom of this because the next candle looked like it was going to break lower, and then it just turned in my face. That's the random nature. It's going to happen. So you have to be patient with it and you have to wait. It wasn't a huge loss. It's just annoying. Okay. But you're better off. I'm going to tell you right now, you're better off taking those type of losses than getting caught and saying, oh, I'm going to give it a chance. And then this thing pulls back 300 points and you're stuck in it now. Right. You don't want to be in that situation. I mean, this was complete noise, right? And just completely faked me out. And it started with that pin bar. Okay. So that's what happens when you get involved at less than ideal prices. So like I said, let this thing close. You got a minute. Now, again, here's the thing. Look, what's the price right now? 549. My original price was basically 510. Okay, so I have to buy this thing now at a much worse price. Yes, it's an inside bar to go long, but I'm fighting the NASDAQ. Do I really want to be in a hurry to get long in this thing again? These levels, these price target levels, of course, would have to change if I got long again, right? So there's the close, inside bar to go long, right? It's there right now. But like I said, do you want to rush into that? If this NASDAQ gives this candle back, pulls one of those, you're just going to get caught again. So don't chase it. Wait for a better level. These levels are no longer relevant because they're going to be a function of your risk based on the size of the candle you get into. Okay. You don't have to be scared by a 5-minute pin bar. Well, it's not that I wasn't. Okay. I said I'm going to ignore that. What got me was the NASDAQ. Okay. I wasn't scared of a 5-minute pin bar. The NASDAQ was breaking, and I'm like, man, I was trying to give this thing a chance to just break even, and this thing looked like it was going to go further. And why lose $100 when I don't have to, right? So, how do I find you on TradingView? Just look at Mark P Markets. I'm on TradingView. I write articles every week on there. You can find me on there. But again, go to my Discord community, all right? Because that's where I have a lot of stuff going on there. Look at this thing now. Yeah, so that's a shakeout, people. And the NASDAQ could have helped if I had just waited 30 more seconds, literally 30 more seconds. So, great example of be patient, give things a chance. I even tried to do that, and it shook me out. Okay, because I was trying to I was being a little too conservative here. And now this thing's running away. Don't chase it. Okay. Wait for the next level. These are where we're going now. These aren't levels to be buying. These are levels to be selling. Okay. This thing would have almost been 1-to-1, right? My 1-to-1 was at 610 or 620, right? We're almost there. Okay. So, are you telling me what to do, Aries? No, I'm not going to do that. Okay. Don't come in here and tell me what to do. I'm trying to give an example here. You can use fib extensions, but not in this type of situation. I wouldn't use a fib extension because those are really good for fib extensions are better for unmapped areas. Okay, something like the NASDAQ. I mean, we haven't looked at our bigger picture NASDAQ, but I don't need to use fibs when I can use historical levels. They're more reliable because they actually show historical price action, some activity that's occurred there before, where fibs usually just overlap, stuff like that. They're just proportions. Don't confuse people here, man. I just spent an hour trying to show people something, and then you're throwing that stuff in there. Don't do that. All right. I use fibs, but I use them in a very conservative way. And I don't want people to be confused by that. Okay. So I know you're just trying to help out, but I'm just saying. So here, I'm going to wrap this up here in a moment. Look at this, though. Do you see how the NASDAQ is turning again? This is why, again, you can't get like carried away and think, okay, it's faking out, blah, blah, blah. You have to wait for these candles to close. And this candle has 2 minutes. If the NASDAQ closes like a pin bar, like it's trying, right, in these next 2 minutes, and it takes out the low, again, it's producing a sell signal inside of a consolidation, and a lower low can follow. If we get that lower low, this is probably not going to continue, right? So in a situation like this, you should be at least looking to adjust, maybe put the stop to break even at this point. If you managed to avoid getting caught in this noise, if you managed to avoid that, looking at a break even stop, or maybe even just taking the money off the table because you are fighting this NASDAQ, okay? So just something to keep in mind there. All right, you guys. So anyway, check the links in the description if you haven't. Check out that auto signals thing that I have coming. It's going to be in the server. It's coming soon. And if you're interested in that active learner deal that I mentioned before for a 30% coupon, come to the channel. Send me a private message in the channel. I'm not going to private message you. You have to send one to me, and I will send you the coupon. All right. So anyway, again, thanks for watching. I hope you got something valuable out of this, and I'll see you next time. So enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.